It's election day in the United States, and the markets are upbeat in expectation of a favorable outcome. Also on the program, the commodities market and how the U.S. elections may impact on prices. Plus, Samsung office is raided in South Korea. Hello and welcome to Business Incorporated, coming to you live on Channels Television. I am Bolaji Akinwale. Let's get started by taking a look at the U.S. markets, where stocks soared at the open of trade as markets breathe a sigh of relief after the FBI said its fresh review of Hillary Clinton's emails won't lead to charges. With more details, is VOA business correspondent in New York, Jill Malandrino.
Jill Malandrino. U.S. stocks soared at the market open. Take a look at this. The Dow is up nearly 260 points. The S&P 500 at 1.6%. In fact, every single one of the S&P 500 stocks is in the green. Now, we are taking a cue from European and Asian markets over the weekend after the FBI said its fresh review of Hillary Clinton's emails won't lead to charges. This triggered a relief rally as political worries eased. This snapped the longest market losing streak in over 36 years. The S&P 500 actually came into trade this morning, riding a 9-day losing streak, its longest since 1980, while the VIX, a measure of fear and uncertainty in the market, posted its 9-straight winning streak following trade on Friday. The release of the second letter has seen a rally in the dollar against major currencies, also the Mexican peso, which is viewed as a proxy for a Donald Trump victory. That was the one standout to the exception. Gold now, that has rallied beyond 1,300 an ounce last week. We're seeing that tumble this morning because it's considered a safe haven asset. In the hours after the president is elected, equity investors may need to brace for some volatility. What they shouldn't do is panic, and that's a theme that we have been on since the Brexit referendum back in June. In fact, the performance that we see here today, it's the best that the market has seen since June 29th, and that was following that 2-day selling that we saw following Brexit. So this is just a reaction of markets consolidating. Trying to trade the immediate reaction, that's the most difficult, even for the most sophisticated institutional investors. So we want to know why the market is reacting positively to an expected Clinton win. Does it suggest she's the better candidate? Not necessarily, so let's take a deeper look on how this is being interpreted. Bloomberg outlined some interesting arguments I want to run through with you. A Clinton victory would roughly preserve a status quo, and that's been fantastic for equity investors over the past 7 to 8 years. So if nothing else, that's a reason why traders may prefer it. As for longer-term policy, the existing framework of minimal fiscal stimulus plus an accommodative Fed, that's also been great for stocks. That helps to preserve the Goldilocks scenario that equity investors crave. Now, if Trump is the fiscal stimulus candidate and that causes the Fed to tighten sooner than expected, then the current regime starts to change. Add in a potentially negative hit to trade, and you have more reasons for equity longs to be concerned. Beyond simple policy questions, there are bigger issues that a Trump presidency would raise. Of course, if Clinton wins, there are some deep issues that aren't going away, but perhaps they'll at least be bottled up for a while longer. Regardless of the outcome, several analysts stateside, we do not expect a major election-related longer-term market disruption for several reasons, but most noticeably, the stock market historically has performed well around elections as policy uncertainty is resolved. From the NASDAQ market site in Times Square, I'm Jill Malandrino for Channels TV.
Thanks, Jill. Still on the U.S. elections, Mexico tourism minister says its country will work with whoever wins the U.S. presidential elections, but also warned of the damage that could be done if trade agreements between the two countries is scrapped. The U.S. is a key market for Mexico's tourism industry, accounting for 59% of visitors who arrive by plane. Some in the American travel industry are also concerned about the prospects of a Trump presidency after the billionaire vowed to ban Muslims from entering the country.
We are all concerned in the world of the elections, but in Mexico we are prepared. We will have to work with whomever wins. We are neighbors. This is a very strong relationship between our countries. It's a huge trade between both nations, and our view is that we're partners for long term. So we are ready for whatever result. We should adapt to whatever result it will take place, and we believe that this is a long-term relationship, and we will continue to work on it.
It would be very impactful, which is why when we educate the policymakers, we're confident those won't happen. Though again, we talk more about the security, the intelligence, communications. That's what needs to happen. That's what keeps us safe, not banning a religion or a country or building walls.
And it's election day in the U.S. and the global markets are upbeat. European stocks opened higher on Tuesday morning as investors focused on the U.S. presidential elections. Olaf Krieger is DWTV financial correspondent and he joins us from the Frankfurt Stock Exchange. Olaf, it's great to have you on the program. Now the markets are in the green as voters go to the polls in the U.S. The reaction across Europe is positive from the numbers that we've seen as shown by the opening figures. But what is the expectation from investors as regards the outcome of the elections and the impacts on the markets?
Well, actually, first of all, I have to say the mood is much better than the days and the weeks before here at the Frankfurt stock market, and today's trading session is largely driven by cautious expectations of a win of Hillary Clinton. But we have to keep in mind that both candidates are not very popular on the stock markets, no matter where in the world, and that they are still neck and neck. So we have to wait which kind of decision we see from the US election 2016. But one thing is for sure, German companies, also the German stock market is looking very close to this election, because the US is one of the most important trading partners for European companies. So this is a big thing for the Frankfurt stock market and for the stock markets all over Europe. And by the way, also Wall Street obviously is preferring Hillary Clinton for the next president of the United States of America.
Now, with this optimism and the markets, especially after the FBI said it had concluded investigation on Hillary Clinton, why do you think the market wants Clinton and not Trump?
Well, I think financial markets showed a clear preference for Hillary Clinton, because many analysts and investors said something like she stands for more stability, more certainty for the stock markets and for the economy as a whole, and that's the most important thing for equity markets around the globe. But investors and traders here are kind of extra careful with any kind of forecast, because it might be they remember the Brexit vote, and most of them, if not all, went completely wrong with their forecast. So everyone here at the Frankfurt stock market is sitting on the edge of their chair and is waiting desperately for the final decision coming from the US.
Now, the UK industrial output dipped to 0.4% in September, as against estimated rise of 0.1%. What does this say about a country that is seeking a soft exit from the European Union amidst plans for large banks and even manufacturing companies to leave after Brexit?
Well, this shows that the UK has to face serious consequences after the Brexit vote in last summer, because so many companies and so many international banks are located in the UK, in the city of London, and some of them have already announced to move away from London to go into elsewhere, especially banks, and this is a hard blow for the capital of financial markets in London. And so I have to say that even from Germany there are many concerns. What is going to happen? Are they going to move to Germany? What is about this huge plan between the London and the Frankfurt Stock Exchange? There are so many things still in the dark, but one thing is for sure: if the UK finally will leave the European Union, it will be a hard blow for the UK, because they are not longer part of the European Union, the largest single currency market. We have to wait and see, but the perspectives are not that good for the UK right now.
Olaf Krieger, DWTV financial correspondent, thank you for your time. Okay, let's move on now by taking a look at China's exports, which is in yuan denominated terms, have narrowed against previous drops in October by falling 3.2% year on year. According to the General Administration of Customs of China, imports have picked up steam by increasing 3.2%. Total foreign trade volume has reached 325.2 billion yuan in October. And Samsung Electronics have come under scrutiny as investigators storm its offices as part of a probe into the political scandal around President Park Geun-hye. The prosecutors are investigating allegations that Samsung gave money to the daughter of Choi Sun-sil, a close friend of the president. Samsung Electronics, affected by a $5.4 billion profit hit, it was forced to discontinue the fire-prone Galaxy Note 7 devices, did not immediately comment on the raid. Park's presidency has been rocked by a scandal involving Choi, who is alleged to have used a closeness to the president to meddle in state affairs and wield influence in the sports and cultural communities. Now let's take a look at the fixed income market back home, where trading has been quiet owing to the active participation of the Central Bank and the Debt Management Office in treasuries and bond auctions. Femi Akiemi is a fixed income dealer with Access Bank and he joins us from Lagos. Femi, it's great to have you on the program.
Hello, good afternoon.
Good afternoon. Now, there's been not much going on at the markets as the Central Bank continues to be involved in auctions. Tell us more about this.
Well, we've seen in the last couple of days, since the beginning of the month, it's been a very, very quiet market. Market has been playing more on the short end of the curve, that's instruments of 1 year and below. So we've seen more activity in the treasury bills market. Opening today, we saw a bit of buying on the short tenor bills. That's bills of November, December, and January. Rates on that opened at around 14%, and we saw market buy that down to as low as 11.52%, while the medium tenor and the long tenor bills dropped by an average of 50, 20 basis points respectively. Currently, the 1 year T-bill is trading at around 18.35, coming from opening at around 18.5, 18.4. But on the bond side, it's been pretty flat. It's been quiet. The turnover as I speak now is less than $1 billion across the market.
So what is the attraction for investors at the market, the long end or the short end of the curve?
Well, the attraction basically is the fact that there will be no primary market auction. That's the treasury bills auction this week. And we don't also expect any OMO auction. So usually in the absence of auctions, we see market playing more on short tenor instruments. That's in the treasury bills market. And considering the fact that market is generally weak, investors would rather play on the short-term instruments than go buy a 5 or 10 year bond as it is now. And if you look at the effective yield on these short tenor instruments, it's as high as 21, 22%. So it's still safer to invest in this instrument than to go into the bond market. However, there's a bond auction next week. Okay. The question now is how high is the government willing to borrow? Will the stock rate go as high as 16% relative to the last auction where it was around 15.5? Maybe if it's more attractive, you might begin to see some flows into the bond market. But
okay.
As it is now, it's more focused on the treasury bills market.
All right, thank you so much, Femi Akiemi, fixed income dealer with Access Bank. We'll go on a break, and when Business Incorporated returns, we'll take it back to the U.S. elections and how it may impact in the commodities markets. Please stay with us.